All right, so we're looking at the the economic consequences of the war in Iran. The first impact is on gas prices, particularly crude oil and liquefied natural gas. You can see recently the price has moved upwards of 50% within the last week. And just to explain why this is happening, is there is the biggest concentration of energy in the Persian Gulf, and 4 of the 5 biggest oil fields are located in the Gulf. So 2 of which being in Saudi Arabia, United Arab Emirates and Kuwait, and 1 in Iran as well. And for tankers to exit this area, they must pass through the Strait of Hormuz here, the area shaded in red. So this is going to have a large impact not only on the price of gas and liquefied natural gas, but also on the Asian nations, specifically China, India, Japan, and South Korea, as they're most dependent on liquefied natural gas from the Gulf, receiving over 80% of the liquid natural gas transported through the Strait of Hormuz. And particularly Japan and South Korea are the most vulnerable because they're very dependent on energy import, whereas China and India have their own sources. So you can look at what alternatives do they have to the Strait of Hormuz. I mean, there's no other channels via water. The alternative option for Saudi Arabia is they have a pipeline, the West pipeline that runs from, a pipeline that runs something like that over here. And this enables them either to go downwards through this narrow passageway here into the Gulf of Aden. I mean, the issue with this is they've had rebels attacking here, although they could go through the Suez Canal as well. That's if they want to go to Europe. So why is this so important? Is the sheer scale of goods imported through the strait. So if we look at this graphic here, what passes through Hormuz? Well, we have 800 million tons of crude, so primarily crude, then liquefied natural gas, although it's more efficient. It's less bulk weight, lots of fertilizer, and more gas and methanol. But perhaps a more useful graphic over here is the percentage of global trade passing through the Strait of Hormuz. So we can see it's going to have a largest impact on the crude oil and fertilizer industry. So potentially fertilizer, the impact on fertilizer, it's going to have a large impact on agriculture companies, probably driving up their cost of production and decreasing their revenue. So potentially could look for short positions on those firms. Initial rise due to the start of the war has already occurred, but if we were to think that the war is going to continue for multiple years on end, there's a couple predictions that we could make. So first off, there's a large liquefied gas field in the north of Qatar, but interestingly, it's around here, and this is the primary supplier of liquefied natural gas. And interestingly, they actually share this supply with Iran. So Iran is also dependent on the liquefied natural gas coming from Qatar. So potentially, as Iran is so dependent on the supply of oil, it wouldn't make sense for them to continue to attack the oil fields which they share. If we look on Polymarket and we look at Iran, and we look at the Strait of Hormuz, it's extremely likely that the strait will close. So given 75% chance, if this strait closes completely, really, like, the pipeline is already near full capacity, so it can't offload all the gas from these oil fields. It can't all go through there. So really, we're going to end up with some stagnation, and it will definitely drive up crude oil prices in the long run, as we've seen here. So I'd expect we can continue to see a breakout in the upwards direction. So I would suspect it continues to drive up in the short term, and then potentially we look at a longer time frame, potentially evens out or continues to go up until the end of the war. Look at crude oil prices. By the end of March, so obviously that's a relatively short time frame, but should the war continue, I think it's highly likely. 75%, $75, $80, $90, $100 even. We can look at what we said here by the end of March. Go to fucking rupee, dollar. We suspect a continued increase in prices. Trend around this level, which is 90. So yeah, I think that's a fairly safe trade. I think continue to push. So concluding arguments are, due to the large impact on the Asian nations, particularly Japan and Korea, we could potentially look to trade the currency, the Japanese yen or Korean, and also potentially look to trade long on crude oil or short on agriculture.